Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within the financial world. And today we're looking at a company that seems to be playing a shell game with its stock offerings. Alright folks, let's dive into a recent filing from GCI Liberty Incorporated. This is a Form 8K, which is usually for big important announcements. And in this case, it is all about a rights offering that just wrapped up. Think of a rights offering as a way for a company to give its existing shareholders the chance to buy more stock, usually at a discount. So what happened with GCI Liberty's latest attempt to get more folks to invest in their company? Before we get into the nitty-gritty, if you like simple explanations of complex financial documents, make sure you are subscribed. And if you want to chat with fellow finance enthusiasts, come join our Discord community. The link is in the description below. So the big news is that their rights offering officially closed on the 23rd of December, after it had actually expired a week earlier on the 17th of December. Now this report itself doesn't give us the juicy financial results of that offering, but it does point us to a press release, which is Exhibit 99.1. Unfortunately, we don't have the full press release text here, but based on the filing, we know the offering is done and dusted. What this filing does give us is a snapshot of the company's publicly traded stock. They have two main classes of common stock that are traded on the Nasdaq Stock Market LLC. One is the Series A GCI Group common stock, trading under the ticker symbol GLIBA. And then there is the Series C GCI Group common stock with its own ticker symbol. GLIP. Now, knowing about these different classes of stock is important because companies can issue different types of stock with varying rights and values. When a company announces a rights offering, it is usually for one or both of these classes. Here is an interesting point. The filing indicates that GCI Liberty Incorporated is classifying itself as an emerging growth company. This means they are a relatively smaller company and can take advantage of certain regulatory flexibilities. In fact, it also states they have elected not to use the extended transition period for complying with new or revised financial accounting standards. This suggests they are either confident in their ability to keep up with accounting rules, or perhaps want to portray a more current financial image. The core of this filing, item 7.01, tells us that this report is essentially a heads up about the completed rights offering. Regulation FD stands for fair disclosure, and it means companies can't selectively release important information to certain people. So by filing this, they are making the news about the offering's completion public. It's important to note, as the filing states, this report and the attached press release are being furnished, not filed, which means they are providing the information, but it does not technically become part of the SEC's official record in the same way a formal filing would. The real details about the rights offering completion are in Exhibit 99.1, the press release. While we don't have the full text here, typically these press releases would announce how much money was raised, how many shares were sold, and what the proceeds will be used for. Without those numbers, it's hard to say if this rights offering was a success or not. They've also included a cover page interactive data file. This is pretty standard now with SEC filings. It is a way to make the key data from the report more accessible and machine readable using a format called inline XBRL. This is really for analysts and software to easily pull out the important numbers, so it is a good sign for transparency even if it is not something most investors directly interact with. Looking at the provided information, GCI Liberty Incorporated seems to be actively managing its capital structure. The fact they conducted a rights offering suggests they might be looking to raise capital for various reasons, such as funding operations, paying down debt, or investing in new projects. However, without the actual results of the offering, we can only speculate on the immediate financial impact. From a broader perspective, GCI Liberty Incorporated operates in a dynamic industry. Their dual stock classes, Series A and Series C GCI Group common stock, both listed on the Nasdaq, indicate a structure designed potentially to cater to different investor preferences or offer varying levels of control. The stock performance of these classes will heavily depend on the company's overall business performance, industry trends, and investor sentiment. The decision to be an emerging growth company and the subsequent choice not to utilize extended transition periods for accounting standards implies a strategic move to project a forward-looking and compliant financial status. This could be to attract investors who value adherence to current accounting practices or to streamline future financial reporting. The completion of the rights offering, while not detailed in this specific 8K, is a significant event. Rights offerings, when successful, can bolster a company's balance sheet, providing much-needed liquidity. Conversely, if the offering is undersubscribed, it might signal a lack of investor confidence or market conditions that are unfavorable for equity raises. The date of the offering's expiration, the 17th of December, 2025, falls within a period where markets can experience volatility, making investor reception a critical factor for success. The nature of this filing, an 8. K with a regulation FD disclosure means they are primarily informing the public about a material event. The event is the conclusion of the rights offering. They are not providing a full financial report here, but rather a notification. To truly gauge the impact of this rights offering, we would need to see the detailed numbers from the press release it references. This includes the total amount raised, the subscription rate, and any potential dilution to existing shareholders. Considering the information at hand, GCI Liberty, Inc. is actively engaging with its shareholders and the capital markets. The strategy behind the rights offering is key, if it was to fund significant growth initiatives or acquisitions. It could be a positive sign if it was primarily to cover operational costs or existing debt. It might suggest underlying financial pressures. The company's classification as an emerging growth company with a proactive stance on accounting standards suggests an attempt to present a strong and modern financial profile. However, the absence of specific financial outcomes from the rights offering in this filing leaves us with a narrative of action rather than concrete results. In conclusion, GCI Liberty, Inc. has completed a rights offering, a move that typically aims to raise capital while we know the offering is over. The success and financial implications remain somewhat opaque without the specific details from their reference press release. The company is positioned as an emerging growth entity, signaling a path forward that prioritizes current financial reporting standards. The real story here lies in the unconfirmed results of the offering, which will dictate whether this was a strategic win or a missed opportunity to strengthen their financial footing. What is your take on rights offerings and their impact on a company's stock? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into corporate finance. And don't forget to check out the Discord link in the description. Thanks for watching, and we'll see you in the next one.